If there's one thing that most people would love to do in their life, it is to make enough money so they can retire early, live comfortably, and never have to worry about money again. Now, there are several ways to make this happen, but in this video, we will discuss two of the most common ways, which are buying bonds or buying stocks. So in this video, I'll explain the difference between these two, how they work, and which one will make you rich in the long run. But first, if you're new here, welcome. Here we discuss everything money, investing, and business. If that sounds interesting, consider subscribing. That way you won't miss out on any future videos. So let's start with what is the difference between bonds and stocks. Stock represents a small slice of ownership in a company. When you buy a share of stock, you're essentially buying a tiny piece of that company. On the other hand, a bond is a loan that you make to an entity, which could be a corporation or a government. When you buy a bond, you're essentially lending your money for a set period of time at a fixed interest rate. At the end of the loan period, the entity that you lent the money to will return your principal, which is the amount you originally invested. In terms of risk, stocks are generally considered to be more risky than bonds. The value of a stock can fluctuate significantly over time, and there's always the risk that a company could go bankrupt, which would leave you with nothing. Bonds, on the other hand, are generally considered to be less risky than stocks. This is because you know how much you're going to get back at the end of the loan period, and the interest payments are usually reliable. When it comes to potential returns, stocks have the potential to generate higher returns than bonds. Over the long term, the stock market has historically returned around 10% per year. Bonds, on the other hand, typically offer lower returns than stocks. For example, a 10-year U.S. government bond currently yields around 3.6%. Now that we understand the basics of both bonds and stocks, let's talk about which one will make you rich in the long run. And to do this, we need to look at three factors: time horizon, risk tolerance, and financial goals. Let's start with time horizon. If you're a long-term investor with a horizon of more than 20 years, then stocks are the clear winner. This is because you have enough time to ride out any short-term fluctuations in the market and potentially benefit from the long-term growth. Historically, the S&P 500 has generated an average annual return of around 10.5% since its inception in 1926. If you invested $1,000 and did nothing for 20 years, your $1,000 would turn into over $8,000. So as you can see, time is one of the most powerful forces in investing. But also keep in mind that past performance is not indicative of future results. Now, on the other hand, if you have a shorter time horizon, then bonds may be a better option. This is because they typically offer lower returns than stocks, but they also come with less risk. For example, if you're planning to retire in 5 years, you probably don't want to put all of your money into stocks. Instead, you may want to consider buying bonds to protect your capital and generate some income. The second factor to consider is risk tolerance. If you're someone who can stomach the ups and downs of the stock market and you're comfortable with the potential for losses, then stocks are a good choice. However, if you're risk averse and you want to protect your capital, then bonds are a better option. As I mentioned before, bonds typically offer lower returns than stocks, but they also come with less risk. So if you're not comfortable with the potential for losses, then bonds may be a better choice. And the last factor to consider is your financial goals. If you're saving for retirement, then stocks are a good option. This is because you have the time horizon to ride out any short-term fluctuations in the market, and the potential for higher returns can help your savings grow faster. On the other hand, if you're saving for a specific and known expense, such as a down payment on a house or a new car, then you may want to consider buying bonds. This is because they typically offer lower returns than stocks, but they also come with less risk. So if you don't want to lose any of your principal, then bonds may be a better option. Another important consideration when deciding whether to buy bonds or stocks is the current state of the economy. If the economy is strong and growing, then stocks are typically a good investment. This is because companies tend to do well when the economy is growing, and their profits and stock prices tend to rise. On the other hand, if the economy is in a recession, or if there is a lot of uncertainty about the future of the economy, then bonds are a better option. This is because they typically offer lower returns than stocks, but they also come with less risk. And during times of economic uncertainty, investors tend to flock to bonds because they are seen as being less risky than stocks. Now let's look at an example to see how these factors would affect your decision. Let's say you're 30 years old, and you have 20 years until you want to retire. You're looking to invest $10,000, and you have a moderate risk tolerance. In this case, you should definitely consider buying a mix of both bonds and stocks. Since you have a long time horizon, you can afford to take on some risk and potentially benefit from the higher returns that stocks can offer. But since you're not comfortable with the potential for losses, you should also buy some bonds to protect your capital. A good starting point would be to split your investment evenly between stocks and bonds. So you would buy $5,000 worth of a low-cost stock index fund and $5,000 worth of a 10-year treasury bond. Then every year you would rebalance your portfolio by selling some of your bonds and buying more stocks. This will help you take advantage of the tax benefits of investing in stocks, while also protecting your capital against losses. It's also important to keep in mind that this is just a general recommendation and your specific situation may vary. For example, if you have a high risk tolerance, you may want to buy more stocks than bonds. Or if you're saving for a specific expense, you may want to buy more bonds than stocks. You should always speak with a financial advisor to determine what the right mix of stocks and bonds is for you based on your individual circumstances. Finally, another important consideration when deciding whether to buy bonds or stocks is the fees that you'll have to pay. Typically, stocks are cheaper to buy than bonds. This is because stocks are traded on exchanges where buyers and sellers come together to buy and sell shares of stock. This means that there is a lot of competition in the market, which helps to keep fees low. On the other hand, bonds are typically less liquid than stocks, which means that there are fewer buyers in the market. This can result in higher fees. Additionally, some brokers charge commissions for buying and selling bonds. So you'll need to keep that in mind as well. Here's a quick summary of our discussion. We've covered a lot of information in this video, so it's important to recap the main points. Firstly, stocks represent a small slice of ownership in a company, whereas bonds are essentially a loan that you make to an entity. Secondly, stocks are generally considered to be more risky than bonds, but they also have the potential for higher returns. Thirdly, bonds typically offer lower returns than stocks, but they also come with less risk. And fourthly, the decision of whether to buy bonds or stocks depends on your individual circumstances, such as your time horizon, risk tolerance, and financial goals. So now the question is, which one will make you rich in the long run? Well, the answer is quite simple. Stocks will make you rich in the long run. This is because the stock market has historically returned around 10% per year over the long term, which is much higher than the returns that you can typically get from bonds. However, keep in mind that this is only true if you stay invested for a long period of time. If you try to time the market or sell when things get bad, you're unlikely to achieve these high returns. So the key to making money in the stock market is to buy and hold for the long term. In conclusion, both stocks and bonds have their pros and cons. Stocks have the potential for higher returns, but they also come with more risk. Bonds, on the other hand, are less risky, but they also offer lower returns. Ultimately, the decision of whether to buy stocks or bonds, or a mix of both, depends on your individual circumstances. But one thing is for sure, stocks will make you rich in the long run. If you stay invested for a long period of time, thank you for watching, and remember to subscribe for more great content.